Good evening, everyone. Welcome to the next installment of the PAiD program Free Professional Development Workshop Series for Artists. We are thrilled to have you all back tonight. For those of you who have been with us before, welcome back. If you are just coming, thank you so much. We're so glad that you could come tonight to meet and learn a bit more about this exciting field, hear from the really wonderful speakers that come from many different backgrounds and expertise to share their experiences and knowledge, excuse me, about the field of public art. And all the adjacent fields that actually come into play in this program, in this field. So we're going to give it a couple of minutes with some kickoff, warm-up things as folks find the link and filter in. And so if we want to go to the next slide, please. So my name is Emily Womack with Dyson and Womack. As always, we are your hosts for this workshop series, and we are so, again, excited that everyone has chosen to come spend a couple of hours with us this evening. As always, we also record these sessions, as all of the recordings are hosted on the county's website. Once those recordings are live and available, we will send an email to everyone who registered for these. So even if you registered and aren't able to attend, even though you won't hear me saying this, we will make sure you get the links and know that you can watch these at your leisure and at your discretion. My colleague Summer Jade Levitt is also going to introduce a little bit of information about the program. And then we will dive into our topic tonight, Funding Your Vision, Financial Management for Public Art Projects. And while I know on the surface that might sound like a fairly dry topic, I can say that I have had just the best time planning this session with our two speakers tonight who bring so much joy, engagement, interest, and actually fun to this topic. So you guys are in for a real treat tonight. I will introduce Lita and Hannah a little bit more in a moment. I also want to say for the Zooms, we always use the Zoom Q&A function. So right now, before we go any further, I'd like everybody just to take a second to find that Q&A button in your Zoom. It's different from the chat. It's like a little speech bubble with a question mark in it. You might be at the bottom or at the top, depending on whether you're online or on the Zoom profile. And it says Q&A. So go ahead and open that up. That is where we will be answering our questions tonight. So if you have a question, if think of something you want to ask at any point during the Q&A, please feel free to, or I'm sorry, during the presentation.
Thanks for reaching out, expressing your concern.
Please feel free to go ahead and pop those in the Q&A chat whenever you have a question come to mind. You don't need to wait till the end. Actually, it helps us to kind of understand how many questions we're getting and try to plan accordingly. So as you think of your questions, go ahead and pop them into that Q&A. We'll mark it as being answered when we start to answer them during the Q&A time. I think that's everything for housekeeping. So we can go to the next slide, and Pat Gomez from LA County Arts and Culture is going to read the county's land acknowledgement.
Thank you, Emily. The County of Los Angeles recognizes that we occupy land originally and still inhabited and cared for by the Tongva, Tataviam, Serrano, Kizh, and Chumash peoples. We honor and pay respect to their elders and descendants, past, present, and emerging, as they continue their stewardship of these lands and waters. We acknowledge that settler colonization resulted in land seizure, disease, subjugation, slavery, relocation, broken promises, genocide, and multi-generational trauma. This acknowledgement demonstrates our responsibility and commitment to truth, healing, and reconciliation, and to elevating the stories, culture, and community of the original inhabitants of Los Angeles County. We are grateful to have the opportunity to live and work on these ancestral lands. We are dedicated to growing and sustaining relationships with Native peoples and local tribal governments, including, in no particular order, the Fernandino Tataviam Band of Mission Indians, Gabrielino Tongva Indians of California Tribal Council, Gabrielino Tongva San Gabriel Band of Mission Indians, Gabrielino Band of Mission Indians Quiche Nation, Yuhavaya Tom of San Manuel Nation, San Fernando Band of Mission Indians, Coastal Band of Chumash Nation, Gabrielino Tongva Nation, Gabrielino Tongva Tribe. To learn more about the First Peoples of Los Angeles County, please visit the Los Angeles County City County Native American Indian Commission website at lanaic.lacounty.gov.
Thank you so much, Pat. Pat will be coming back to join us during the Q&A section of tonight, but we're going to say goodbye to Pat for now. And while we're doing that, we're going to also move on and bring up a new disclaimer that we don't traditionally need to do, but as we are talking about finances, I'm going to hand it over just briefly to Hannah to speak about the tax disclaimer.
Hi. I'm not going to read this whole boring legal language, but I will just say essentially what this means is this is for educational purposes. So I hope that you'll become educated by it, learn from it, but you must not take anything that any of us say tonight as individual tax or financial advice. So there.
Thank you so much. And next, I will hand it over to my colleague Summer to just briefly share a little bit about the PAiD program.
Yes, thank you. So the PAiD program is a multi-year initiative funded by the Mellon Foundation that aims to increase diversity, equity, and inclusion in the field of public art while supporting the sustainability of the LA County creative economy with artists' needs in mind. The program is designed to tackle critical barriers to entry in the field of public art and address the wider career challenges faced by artists. The program is made up of multiple components, including the Artist Council, which is held across 2 cycles. Each cycle is 8 artists who are selected to make recommendations to the county about how policies can create better opportunities for artists in the county. They also will create temporary public art projects that will be displayed across the county for about 1 to 2 months. Then we have the paid apprenticeship, which is also held across 2 cycles. Each cycle is a cohort of 5 artists, all of whom have not completed a public art project or civic art project and participate in mentorship and training to complete their first civic art project. Then we have the paid professional development workshops. This is one of them. And each workshop is created to provide information and resources to support artists from all backgrounds and career stages. All of the professional development workshops are recorded and will be housed on the PAiD website, where you can find all of the recordings from the previous cycle, as well as this session, previous sessions from this cycle coming up in the future.
Thank you.
And so the upcoming workshops that we have, we will have about 6 more sessions in this cycle. They will all be held across March and April. Those dates will be announced soon, so please keep an eye out for that. But we will be kicking off the additional workshops with sessions about fabrication. So those will be really exciting.
Yes.
And I'm going to pass it back over to you, Emily.
Thank you so much, Summer. So we're headed into Fab Talk materials. Come back for part 2 of this workshop series, but we're closing workshop series part 2, part 1 tonight with Funding Your Vision, Financial Management for Public Art Projects. We are going to talk about budgets and smart ways to navigate budgets, how to work well with your commissioning agency to make sure that you don't get stuck in a bad spot with finances during a longer public art project. And we're also going to talk about how to consider tax planning when you sometimes get these bigger projects with larger budgets, multi-years, sometimes for the first time. So we're gonna dive into that with both of our presenters tonight. And I am so happy to introduce Lita is the Assistant Director of Civic Art at LA County Department of Arts and Culture, and is someone that I have gotten to know a little bit over the course of the PAiD program. And I can just say with so much honesty, actually, that Lita is an incredible human with a wealth of knowledge and a real passion and spirit for art and artists. And that is such an amazing thing to have in someone who works in this field. So I just want to say thank you so much for joining us. As I mentioned, Lita is the Assistant Director of Civic Art. And in that role, she oversees the day-to-day operations of the Civic Art Division. She plays a key role in shaping both policies and strategies that support arts and culture across LA County, while managing the division's operational, financial, and administrative functions. So within all of that, I can't believe you had time to also come and participate tonight. Prior to her tenure with Public Art, Lita worked alongside art advisor Estela Provas, known for her work with the UMax Museum and Foundation in Mexico City. She also held positions at various LA galleries, including Diane Rosenstein, M. Harrington, and Gleit Gallery, where she managed exhibitions and special programming. Lita holds degrees in both studio arts and business management from Loyola Marymount University. And we are also joined tonight by Hannah Cole. Hannah Cole is the founder of Sunlight Tax, a tax expert who specializes in working with self-employed people. And I will also say I have met Hannah for the first time through this program and through having Hannah join this. And I am so thrilled to have met you because there are not many people that do the work that Hannah does. And not only not many people who do that work, but who do it with such passion, enthusiasm, joy, and care. You guys are in for a real treat tonight. But Hannah, as I mentioned, works with self-employed people, especially those in creative and mission-driven fields. As a longtime working artist herself, she's helped tens of thousands of self-employed people skill up with accessible tax and money education. Through her Money Bootcamp program, tax workshops from Florida to Alaska, and via the Sunlight Tax podcast. Her forthcoming book, Taxes for Humans, Simplify Your Taxes and Change the World When You're Self-Employed, is the most funny and empowering tax guide you will ever read, and I can't wait to get my copy. Hannah is the founder of Sunlight Tax, and thank you as well for joining us tonight. So with that, if there's anything else I missed in your introductions, please feel free to add that. But first, we're going to hand it over to Lita to speak a little bit about the process of budgeting and how that all comes together when working with a commissioning agency.
Thank you, Emily, and thank you, Summer. That was quite the introduction. You mentioned this was going to be a fun presentation. I don't know about that, but we'll do our best. So just to get started in the first slide, I want to talk about why we are having this conversation. And Summer, if you can go to the next slide. This is one of the most important conversations that artists can have when entering the public art field. And I'm definitely a little bit biased because this is my field of expertise, but just hear me out. Let me pitch this. So public art financial management, yes, it's complex and it's messy. And that's because it's where art intersects with construction schedules and government systems and approvals and budgets and timelines. And yet most artists aren't formally trained on how to navigate this environment. But if you can understand how public art budgets function, then you can gain control over your artwork success. And although we're going to be going through some complex financial information at 6:15 on a Monday, which I know is just the perfect time for our brains to absorb complex financial information, the goal is that today you're going to leave with 5 key pieces of information. The first is what makes up a public art budget. The second is how to build your public art budget and how to track it over time. The third is what is cash flow planning and how in public art and how to do it. The fourth is how to feel financially safe and secure while you're managing a project. And then lastly, we're going to go over some common pitfalls that we see in public art projects. So before we get into this, I want to reframe the conversation a little bit. Throughout this session, I want you to think about a public art commission as running a temporary small business rather than just producing an artwork. This is something we hear a lot from artists, which is not realizing or being taught just how much business management is involved in a public art project. And realistically, a public art commission is probably half art, half business management, if not more. So when you're working on a public art project, you're really managing a business, which involves budgets and paying vendors and tracking timelines and managing risk. So yes, this is not the fun, creative kind of side of a public art project. It's the part that people usually dread the most, but also need the most. So if we haven't scared you already, let's get into this. So in the first slide, we're going to be talking about the types of costs that you can expect when working on a public art project. And Summer, if you can move to the next slide. So let's imagine for a second that you were just awarded a $100,000 public art commission. The key thing to note here is that a $100,000 commission is not $100,000 in income. It is $100,000 of money that you need to manage. So here I'm showing you an example of how that money is broken up. And this is just a sample because projects vary a lot and costs vary a lot, but this is just to give you kind of a general idea of how things work. So project administration, your artist fee. This typically ranges from 15 to 20%. 20% is now becoming the standard, but this is your compensation for creative development. This is your artist design fee. I've also included a project management category here, which is usually money that's set aside for managing your project, coordinating site visits, doing administrative oversight. But keep in mind that a lot of agencies include this type of work as part of the 20% design fee and not separate. So as you're working on a project, just ask those questions to see if those fees can be separated out. Insurance, every public art contract will require you to have some type of insurance. The two standard types are auto insurance and liability insurance. Workers' comp if you have employees, but those are the two main ones. And this insurance is meant to protect you and the agency in case something goes wrong with your project. I've also listed some general expenses. These are some of the types of costs that you might expect, you might need to budget for or expect. So you might be asked to develop a community engagement plan and budget. You might be asked to work with an art conservator to review your proposed materials to ensure longevity of your artwork. You might be asked to work with an engineer who will need to review and stamp your drawings. You might be asked to professionally photograph your artwork or do signage or a plaque next to your piece. But the majority of your costs are going to be your artwork fabrication and installation. This includes all the costs that are associated with the creation of your artwork. You may need to prepare the site. So you might need to pour concrete, pour the foundation, figure out how your artwork is going to attach and be secured to the building. You might need to obtain a building permit. You might need to store your artwork until the site is ready for installation. And these are all costs that you need to consider. And then you always want to include a minimum of a 10% contingency. We're going to go over contingency separately because this is a very important topic, but I'm just flagging it here for everybody. Okay, so that's the anatomy of a public art budget. In the next slide, now you know what makes up a budget and you just got the $100,000 commission. What's the first thing we do? We build our budget. Building and tracking a budget is the best way to manage your project finances. And any finance person will tell you a budget is a plan. So in the interest of time, I'm not making everybody come up with a budget. I've built it for you, so we're going to go over that. I've given everybody a 20% artist fee. I've budgeted for project management expenses, insurance. We've also budgeted for design development, basically everything that we've been over in the previous slide, engineering, permit fees, conservators, all that good stuff. And then I've also put together your fabrication, transportation, and installation costs and gave you a 10% contingency. How did I do that? I estimated costs. I called your subcontractors. I asked for bids. I secured your fabricator. I found your installer, and I got all those numbers to add up to your commission amount. This is budget planning. This is what you will be asked to do as an artist when you get a commission. You want your project to feel affordable, and you also want to feel like it's doable as you're going into it. So you have your budget. Now what? Now we track. So do things ever go according to plan? Never. So reminder, a budget is a plan. Accounting is your actuals. So, which is why we have a column next to it, which tracks what actually happened. And then we have a third one. Thank you to the Dyson and Romac team for providing this amazing budget, by the way, to calculate the difference between the two, which is the variance. So you budgeted $1,500, or I budgeted for you $1,500 for engineering, but it turns out your engineer needs to do an extra hour of work, and that's going to cost you an extra $400. That money needs to be added to your actuals column, and it needs to come from somewhere, because remember, your total budget is your total budget. So most likely that might come from your contingency, it might come from cost savings that you have somewhere else, but either way, you need to continuously track your budget and your actuals throughout the project to make sure that your project is on track. And why is this helpful? One, it allows you to identify your fixed and your variable costs. So fixed costs are your artist fee, for example. That will not change throughout your project. It is a 20% fee and it's going to continue. Materials, on the other hand, are variable. Material costs change, and you need to be able to project and account for that. Another key thing is that building and tracking a budget allows you to identify your high risk categories. So what are the areas that you are most unsure about, the most unknown categories? And then how do you build an allowance for that? And then lastly, things change, and you'll hear me talk about this throughout. Things change, especially with public art projects. So tracking allows you to identify those variances early on. So material costs, labor rates fluctuate a lot, especially over large public art projects and large timelines. So tracking your actual costs as they come in will give you a clear picture of where you are. Okay, in the next slide, and this is where things get a little bit interesting and also where I lose most people, but stick with me. So now you have your budget developed. Let's talk about how you get paid. So 99% of the time, if not 100% of the time, public art agencies will pay you on a milestone basis. What does that mean? It means that they typically pay out between 5 to 10 payments based on completion of certain parts of your project. So they're not going to give you that $100,000 upfront. Although, yes, that would make everybody's life a lot easier, but public agencies need to account for risk. So they pay as a project progresses. So in the first column, the money in column, you will see a typical milestone payment breakdown that will show up in your contract. You will likely get about 10% upfront so that the project gets started. And then after you complete certain parts of your scope of work, you will invoice and get paid. This is how you can plan when your money is coming in. Where things get a little bit complicated is that just like money's coming in, money also needs to go out, unfortunately. So you need to make sure that you have enough money in the bank to pay people and to ensure that your cash flow is being managed. And how do you do that? You need to do a little bit of planning upfront. So here's an example. I listed in the second column all of the people that you may need to pay on your $100,000 project and approximately when they need to get paid. And again, how do I know this? I spoke to them, I negotiated with them. This is work that you're going to have to do as well. Then part of what you need to do is go through the column on the right and see all the dates that, on the left, all the dates that you are getting paid, and then look at who you need to pay and identify any gaps up front. And keep in mind, commissioning agencies usually take around 30 days, maybe 60 days to pay. So in this example, let's say it's 30 days just to make things easier. So you are invoicing for $10,000 on January 1st. So if we look at a 30-day timeline, you will receive your first payment on February 1st. Your next payment is not until April 1st, which means you're not going to receive the funding until May 1st. So that means that $10,000 needs to get you through May 1st. Is that realistic? Let's look at your second column. Your second column shows 1, 2, 3, 4. There's 5 payments that you need to make between January 1st and May 1st. If my math is correct, that adds up to more than $10,000. So you do not have sufficient cash flow to get through the project. What do you do? So now that you've identified a gap, you need to talk to your commissioning agency to see if your milestones can be adjusted. This happens during the contract negotiation stage. And maybe part of it is asking for 15% upfront, or asking if you can get your second milestone paid earlier. And when agencies set up your milestones, they do it based on what we think that you need, but we may not know what you know. So although the goal is for it to already be set up, that all the cash flows there, it's also part of an artist's responsibility to go through and make sure that that works, because a project should always be set up so that you have all the money that you need to sustain the project. So here's some common things that you can ask your commissioning agency for. What is your payment timeline? Do you accommodate rush payments? Do you accommodate partial payments? These are some of the things that can help set you up for success if you know those things up front. I hope I didn't lose you there, but let's keep going. Let's talk about financial safety. Because now that you know all the potential public art costs, you know how to budget, you know how to track your actuals, you know how to manage your cash flow and timeline, that's already a lot. But I also want to acknowledge that this is a lot of responsibility. And for a lot of artists, or just humans in general, receiving a large sum of money can feel scary, especially given when projects can last multiple years. And yes, there are ways to make things easier. You can start your own bank account, you can work with a bookkeeper, but at the end of the day, it's your project, and it's still important that you have basic information of how it works, whether you choose to outsource it or not. So let's talk about how to make your project feel safe and feel confident. This is where your contingency comes in. Your contingency is your buffer. It's the money that you've set aside in case issues come up. And you might say, but Lita, I planned everything. My budget's perfect. My milestones are perfect. I looked at everything. It's laid out the way it's supposed to be. Again, public art projects change drastically from how we plan them to how they end up being. So like I mentioned, cost of materials can increase. During COVID, for example, we saw a drastic increase in the cost of wood. Right now, we're seeing a drastic increase in the cost of metal. So say you had budgeted $10,000 for materials, and now those same materials are $15,000. Well, you're still okay because you budgeted $10,000 for contingency for situations like this. So every agency is different when it comes to contingency. Some agencies like ours require approvals up front and more communication when it comes to your contingency. Others do not. So make sure you read your contract, make sure you ask questions. And then speaking of financial safety, and this is, if there's one thing that you take away from this presentation, it's this. I would really encourage you to start viewing your commissioning agency as your partner, because public art has historically been and continues to be very hierarchical, where an agency hires you, they hold the contract, you create the work, you deliver the project, and they pay you. The new and more successful approach, in my opinion, is to view the agency as part of your project team, because project managers and agencies are just as invested in the success of the project as you are. So, and also remember, project managers, especially on our team, are also artists, they're creatives, they're architects. Their goal is to support artists while ensuring that projects get delivered. So, and just in the 10 years that I've been with the Department of Arts and Culture, navigating project issues and financial issues, I can tell you with 100% certainty that the projects that experience the most financial challenges are the ones that do not have open channels of communication. Budget issues often escalate because artists communicate too late. And I get it. I understand. When an artist starts experiencing or seeing some increase in costs, the first thought is, I'm going to make this work. I'm going to use my contingency. I'm going to use part of my artist fee, which don't do that. I've even heard of artists using their own personal funds. So the conversation should really be reframed to, hey, I'm seeing costs go up. I see a flag. Let me check in with my project manager and keep them aware so they can support. Catching issues early on ensures that the commissioning agency can be on your side and help you navigate it and solve it. That is financial safety. Okay, budget pitfalls. Let's go over some of the common ones. And by this time, you should know a lot of these. One is not budgeting for common public art costs. So a common one is permitting and engineering. So make sure your budget includes all possible costs that we went over in the first slide. And it's common for agencies to request budgets from you. So if you're unsure, just ask questions. No one expects that you know everything going into a project. The second is not properly planning for the money in and money out piece. So the most stressful thing is needing to pay people and not having sufficient funds to do so, and waiting for them to come in, which can impact your schedule and cause delays. So spending that time up front to do that comparison and make sure you're set up for success is really key. Third, just talked about this, communication is everything. Keep your project manager informed of your budget and your costs as you're going through the project. The fourth is be prepared for a public art project to be similar to running a small business. Also talked about this. It's not all creative work, and being aware of the business side and the business management responsibilities will ensure that you're splitting up your time to do both. And then lastly, this is a tough one. Your $100,000 commission should not be viewed as a steady monthly income source. And let me explain why. Say you received the $100,000 commission and the project is meant to last a year. So your artist fee is 20%, that's $20,000 in income that you plan to receive this year. Then construction shifts. Delays are common, if not standard. So you are notified that a milestone payment is pushed back 3 months and installation is moving to the next quarter. The project is not costing you more, so you're still financially safe. It just moved by 6 months. So your original plan of that yearly income is no longer the case. So relying on public art commission as a predictable monthly income will almost always set you up to fail. So because construction projects are almost never on schedule, and our contracts are milestone based, they're not monthly retainers. Really understanding and planning for that can help prevent financial panic. And then the last thing I want to say before I pass it to Hannah is that although all of this can be overwhelming and public art can be an overwhelming thing to go through because artists are asked to step into these systems that they're not always familiar with, which is construction, permitting, planning, budgeting, there's something that's really amazing about it. And that it's not a solo act, it's a partnership. So it's a partnership between you, your project manager, your agency, your fabricator, your installer, your engineer, your community. It's all about partnership, and it's about a team of people who are rooting for you and are there to support you. The most successful projects that I've seen are the ones that are collaboratively managed, where questions are asked early, where budget conversations are open, adjustments are collaborative. Public art is not about navigating that complexity alone. It's about building something that's meaningful and having that support system. So even though we went over a ton of complicated financial information, just know that you're still not expected to know all that and manage it alone. So with that, I'm going to pass it to maybe another potential member of your team at some point to talk about taxes and tax management.
Awesome. That was beautiful, Lita. Thank you. Emily, do you have anything that you want to add before I jump in?
No, I was just going to say we're going to take the slides down during your presentation so that you can go analog. So just let us know when you're ready to bring the slides down.
Lovely. Okay. In just a second, I'm going to bring out my whiteboard. So hi, everybody. I'm so happy to be with you and share space with you today. I am not just a tax person. I am an active artist. So don't worry, I'm not here to judge you. This is really just about information that is meant to be helpful. I think what feels the most helpful to me is if I keep my presentation on the lighter side, but go heavy on the questions, because I think what I picture is that teasing out kind of what is and is not true with taxes might be a little bit more valuable for the tax segment. Okay, but with that said, I think we can do a little drawing on my whiteboard.
Great. Summer, do you mind turning off the presentation for a minute?
Perfect. Awesome. Okay, try to draw nice and big. So what I want to do, first of all, is just set the stage of how your taxes work, how this grant income is going to integrate into the taxes you already owe every year. So I want to talk about how the grant itself will be taxed. And then let's also talk about the reality. You're also earning income from other places. And so let's talk about how all of that is going to integrate into the grant and it'll fit together. Okay, so first thing to note, taxes operate on a calendar year basis, right? So for your tax return, your tax reporting, what counts, what's going to be reportable for taxes is what you bring in a calendar year, okay, between January 1st and December 31st. Keep that in mind. That's going to be key. This is especially important because these projects are going to tend to go over multiple years. So you're not going to owe tax, all in one year, but you are going to have to know how much you owe each year, okay? So here's the very basic little equation for you. So you've got the grant amount. Is that the right terminology, or should I say public funding? What would you want me to call that?
Let's call it commission amount.
Commission. Okay, let's use the right words. Okay,
Thank you.
yeah. Okay, so you've got your commission amount in a calendar year. So between January 1st and December 31st, okay? This, yes, you have to report all of it. So I think Lita did a very good job of making it clear you have to track the money right up front. I'm only going to confirm that. It is your job, and in fact, from a tax standpoint, legal obligation to report all the income that you receive, non-negotiable. Okay, so you're going to be reporting all the money you receive in a calendar year. However, good news, you're not going to be taxed on all of it. That's the really wonderful thing. So the expenses that you incur against this money, you get to deduct out of the taxable amount, leaving you with taxable profit, okay? We hope it's not a loss. That artist fee is important. Paying yourself is important. Having a margin to live on is important. But it is possible for you to have a negative number that you're going to report. And if you have that, we can talk a little bit about how that could happen if there's a blip in your income versus expenses that goes over a year, right? For example, we don't want this to happen. But if you got a big chunk of the commission payment late in the year, say December, right? But you did not have time to spend that money, right? There was a delay in you paying. You would have a big profit for that year and you would owe tax on that, okay? But the following year, you won't be double reporting that income. You only report it once. You won't have that income, but you will have a bunch of expenses. So what can happen is you might have a year you pay a bunch of tax, maybe more than you wish. And the following year, you can actually report a negative number, which will subtract money off your other taxable income. So it's actually a tax benefit to you. So I just want you to be aware, it does all come out in the wash. If we look at a suite of 5 years of tax returns, the money, the income and the expenses are going to even out to what happened in reality. But if your cash flow management gets wonky, you could end up having a big profit year and then a loss year. It's possible. And that's something ideally we want to avoid. I just want to mention it can happen. Okay. So effectively, these are the 3 things you're going to be tracking. Okay. Let's talk about what you actually pay tax on when it comes to the profit, okay? I say this really because tax literacy in our country, this is not your fault. Tax literacy in our country is abysmally low. We should teach this in high schools. It's part of civics, but we don't. So none of us know it, and we all feel like we're bad and broken, but actually we're not. We just never learned, right? This is just another skill, and you are so skilled, and you do so many incredible things. And this is one of them, this whole public art commission that you're working on. So this is just another skill in your tool basket. Okay, so how did the taxes work on this income? The income that you earn as an artist, this including the commission income, whatever profit you have left after your expenses for it, is going to be considered self-employment income. Okay. We can, let me see. I'm gonna erase this maybe for just a second. Okay. So let's say that you had $10,000 left over in a given year. Okay, so that's profit. So that's after you've taken out expenses, right? Okay, well, first of all, this is going to be subject to what we call self-employment tax, okay? Self-employment tax is 15.3% of your profit, okay? Now let's just back up. If you are working a job as an employee, being paid on payroll, when you are working a job like that, I don't know, you're a barista at Starbucks, you're a professor at CalArts, right? You get a W-2 from CalArts, right? Well, your pay, 7.65% of your pay will be taken out of your CalArts paycheck, okay? And it will be sent to the US Treasury to pay into your future medical benefit called Medicare and your future retirement benefit called Social Security, okay? Now, what you don't see that's happening when you have a day job is that your boss is actually matching that payment, right? This doesn't show up on your W-2, it doesn't show up on your pay stub because it's not coming out of your pocket, right? It's coming out of somebody else's pocket. But when you are self-employed, you are the boss, right? You are both the employee and the boss. Just as that word self-employment is reflexive, you're wearing 2 hats on one head, okay? Which means, by the way, if you add 7.65 plus 7.65, it equals 15.3, okay? This is the reason, so we give it a new name at this point, and we call it self-employment tax. But effectively what that is you paying into Medicare and Social Security as an employee, and then you also paying into Medicare and Social Security as an employer, okay? So this is really important to know about. I find most people don't have this education to begin with. We don't learn about it, but this is really critically important for you to know about because this is going to be the largest factor in your tax bill, okay? It's actually much bigger than your federal income tax. So this is layer 1. Layer 2 is federal income tax. And those rates range from 0 to 37%. Oh, sorry, glare. Let me move that. Oh, my light. Can move it a little bit. All right. So your federal income tax rates are 0 to 37%. This is what people call tax brackets. Also, people, again, financial literacy being as poor as it is in the US, not just from you, like everyone, nobody knows this stuff. People misunderstand how tax brackets work, and they fear that having a little bit of income into the next tax bracket is going to spike your taxes. It does not. That's not how they work. They're much more gentle than that. Basically, any amount that you make up into the next tax bracket, only that little bit that peaks above the next tax bracket, only that is taxed at the new tax rate. Every dollar below it is taxed at lower tax rates, okay? So even down here, your first $12,000 of income is taxed at a rate of 0%, okay? So this is what we mean when we refer to a graduated income tax system. Think of it kind of like a layer cake. Layer 1 is taxed at 0, layer 2, 10%, layer 3, 12%, and it goes up, okay? So tax brackets, kind of not such a big deal. Okay, layer 3, state income tax, okay? So be aware that all 3 layers of this tax are going to be applied to your $10,000 of profit, or your $100 of profit, or your $100,000 of profit. Doesn't matter what number we pick. These are all the layers that will affect it. Now, again, because of the sort of layer cake effect of federal income taxes, you're not going to actually owe very much in federal income tax until you start earning, higher and higher amounts of money. But self-employment tax kicks in $1, okay? So self-employment tax, no matter how little money you earn, you're going to owe 15.3% of it to pay into your Medicare and Social Security, okay? When artists underestimate their tax bill, this is why. It is because they don't understand self-employment tax, okay? Not your fault, but I just want to kind of make you aware that is the biggie, okay? Not to be trifled with is California's state income taxes. It's one of the highest tax states in the nation. So that's not nothing. I say from having lived in New York City, the other one, for a long, long time. Okay. Okay. Question so far? All right.
We do have a couple.
Okay. On taxes?
Yeah,
Yeah.
one was about, just to clarify again, in that for year, 1 year, January 1 to December 31, are you reporting the entire commission or just the milestone payments you received in that year?
You are only reporting money you received. Okay. So a really good metric for you to be thinking about as you earn money through the year, what entered your bank account? That's what you're taxed on. That's what you're going to have to report. If it's owed to you, but nobody's paid it yet, not going on your tax return. Okay. So think of your bank account as the thing. In fact, while we're talking about bank accounts, it's a really nice idea to open, first of all, for your art practice in general, you want to have a separate bank account open where you have only your art income going into that account and only your art expenses coming out of that account. The reason that is so wonderful and beneficial is that then you have a record of everything coming in and going out of your art account in a calendar year. This becomes the basis of bookkeeping, okay? So now you can just print out, download those bank statements, and then you will do your bookkeeping from bank statements, right? What you don't want, and listen, before I was an accountant, I didn't know this stuff, and I was an artist who would print out 12 bank statements 10 days before the tax deadline, and I would be squinting, like trying to remember, 9 months ago, was that trip to Home Depot for my apartment or was it for the studio? I can't remember, right? Because I didn't have a separate business bank account. That's hell on wheels. Do not recommend, 0 stars. So you definitely want to avoid that. And I'm going to say, when you become a public artist, your liability increases. And having a separate business bank account is a good idea for liability purposes as well as for bookkeeping purposes. And so if you decide that you are wanting to form an LLC, which stands for Limited Liability Company, what an LLC does for you is it separates your business assets from your personal assets, okay? Without an LLC, if I'm an artist, I'm Hannah Cole Artist. My public art, I make a big, heavy sculpture that's hanging over a doorway. Let's say it falls on somebody and it breaks their leg, right? We don't want that. But if that happens, that person's probably going to sue me, right? So if they sue me and I have no LLC, here's how that goes down. There's no separation between my business assets and my personal assets. So if I'm found at fault, and I think I'm going to be in this situation, if I'm found at fault, then that lawsuit, the damages can go and touch any asset that I own. Most of your wealth is personal and not business, right? Your house, your car, your savings, your kids' college fund. Those are things that are personal assets, not business assets. So if I am going to go and get a large public art commission, I might want to form an LLC to limit the liability to only my business assets so that my home and my savings are protected, okay? If you form an LLC, having a separate business bank account for the business assets, for your business money, is no longer optional. Now it's mandatory. And the reason is, a court of law, if my sculpture falls on somebody and that person sues me, even if I have an LLC, the opposing counsel, if they're doing their job, is going to subpoena my bank records. They're going to see that I commingle business and personal accounts. And they do this thing, it's a cool name, called piercing the corporate veil, where they say, oh, Hannah Cole, the person, and Hannah Cole, the artist, are one and the same. They're commingled. So actually, she doesn't have limited liability. She has total liability. And we're going to take her house now. Okay? So I hope I scared you on purpose because I want you to have religion about separating your account. That separate account is a savior for you, and it's really important. It's also wonderful because it makes your bookkeeping easier and cleaner. So it's all positive. It's all upside, okay? Another little note for you, because a lot of banks might require you to have certain paperwork like articles of organization, things like this. If it's a bank, like a business bank account to the bank, I will tell you that that actually doesn't matter to you. What matters to you is a separate account, and it can be something that the bank calls a personal account. That's fine. That actually doesn't matter, okay? So it's okay to open like a personal checking account according to what your bank calls it, but you treat it as, art income. That's fine, okay? It's the separateness that is what counts here, okay? All right, questions on any of that?
We do have a couple more clarifying questions. And
Love it.
so does the self-employment tax apply to the entire commission or just to the profit after expenses or deduction?
Wonderful question. It only applies to the profit, okay? That's the really good news. So what's really important to understand is from a tax standpoint, any expenses that you incur as you make income are, when you're self-employed, you are considered a business, okay? In fact, let's write out all the synonyms for that, because you might call yourself one of many, many different terms. And I want you to understand that from a taxes standpoint, they're all the same thing, okay? So when you're self-employed, you are taxed as a business, okay, under US tax law. Super important to know. Let's list the synonyms. You might call yourself a contractor or a freelancer, or you might call that income contract income or freelance income. Doesn't matter. It's business income. You might be a sole proprietor. Now this one is from the legal side, which PS is not the same thing as from the tax side, but from the legal side, sole proprietor means you don't have an LLC, you don't have a separation between your business and personal. That doesn't matter though for your taxes. When you're one person, and you form an LLC. So forming an LLC is optional, but maybe a good idea if you do public art, because there is a risk you're going to interact with the public. That is some liability, right? So single member in the law means one owner. But if you're one owner and you have an LLC, what's interesting is it doesn't change your taxes at all. Just tax exactly the same way as all these people. It's still self-employment income, okay? So you don't have to get all tripped up and worry that your taxes got harder. They really did not. The only difference with the single member LLC is that now on your tax form, which is called a Schedule C, which is where you report your self-employment income. That's what it looks like if you want to see. The only difference is now, in addition to the Social Security number or ITIN that is on your basic, tax return, your 1040, you'll also now have an EIN that you'll put at the top of your Schedule C. That is the only change that happens when you form an LLC. It actually doesn't change your taxes. And just because people don't believe me, I know this because it's my number one question at Sunlight Tax. The IRS calls single member LLCs disregarded entities. Okay. So just think about that wording for a second. They're disregarded. Okay. Doesn't make any difference. It's still business income. Okay. So having said all of that, I'm going to pull out that Schedule C again, because I want you to see the basic structure of it. One, I want you not to fear this. This is like your information. You can use it. You can find numbers on this. You can pull out the one you had from last year to get a sort of baseline for yourself. Oh, okay, so that's how that worked last year. And then once you have that baseline, you can think, okay, so this year is going similar to last year. It's probably going to be roughly similar numbers. Or this year I have that big public art commission, and that's going to be additional to this. So you have some sort of baseline to work with when you get yourself familiar with looking at your Schedule C. Okay. All right. So let's talk about the basic equation that is set up with the Schedule C. And I want to get a little bit more into deductions. Okay.
Great.
All right. So the basic structure of your Schedule C is pretty simple. It's actually the equation we already wrote. You have to report your income, okay? This is a tiny form that I'm flashing. I realize you can't read the tiny writing, but it's right here in this bold section, Part 1, income, okay? It's pretty bold and pretty right on top. You have to report all the income that you earn between January 1st and December 31st. You may not understate that number. If you understate that number by more than 25%, it's a felony. So the IRS is not casual about that. Okay. But you are a business. Even though, just a little contract income, just a little 1099, it still counts as self-employment income, AKA business income, right? They call it a business here on this form. And so what you get to report is the difference. Your taxable amount that you report is the difference. And I want you to note again, in the title, notice that it does not say, we're only going to tax you on your profit. That's it. It says profit or loss. Both are options, okay? You might have a negative number that you're reporting, okay? We prefer that you didn't, but you might, and it can happen. And the fact that you're a business is what entitles you to be able to report a loss, okay? So what's an expense? When you're a business, for your self-employment, for your art, an expense, the IRS rules for deductible expenses for your art business are anything that is ordinary and necessary for running that business, okay? For an artist, the variety there could be huge, right? I had a show in New York at my gallery that with this photographer who photographed like really crazy, like outlandish amounts of like rotting papayas with models lying in rotting papayas, or, like people wrapped in bacon. So like for this artist, 300 pounds of papaya from Sunset Park, Brooklyn, that is a deduction for him, right? That is a supply, that is a studio prop, right? Now, me, I can't deduct 300 pounds of papaya because that isn't how I work. That isn't a supply for me and my art, right? But so it's going to depend a little bit on what you do. But certainly everything in that budget for your grant for this commission is going to be one of these deductible expenses. They're very generous. They're going to encompass almost anything you would spend money on in your practice, except breaking the law, right? Like, for example, your parking is going to be deductible. If you have to go drive to a site visit, parking's deductible. But if you get a ticket while you're there, that's technically breaking the law. So that parking ticket is not deductible. Okay. So, and if you bribed an official to get a grant, that might be truly to you a cost of doing business, right? There are businesses that operate that way, and it would go in your books,
Can I
but
ask
it
you
would
a
not be tax
clarifying
deductible. What's
question?
that?
Can I ask you a quick, you were saying everything in that budget we looked at earlier
Yeah.
with Lita, the artist fee is in that budget. Is the
Mhm.
artist fee considered expense or profit?
The artist fee is what we're hoping money that you keep. So because you keep it, you are going to be paying taxes on it. Yeah. Also, it's good to pay a little tax. In fact, it's good for your tax bill to go up and up because we want to be making money. Like, that's positive. So I hope that you do have a bunch of profit, right? Yeah. Please, please. Okay. More questions?
We do. I'm going to leave one. There is one about quarterly taxes versus annual taxes, and I know that's a topic you wanted to address. But there's a few others that kind of have things that you've already been talking about. So maybe I'll go to those first, and then we can talk about quarterly or annual. So one question is about the self-employment taxes. And the question is just trying to clarify. So you are not exempt from paying self-employment taxes under a certain amount?
Technically, there is an amount. Technically, it's only when your profit is over $400. Okay. That's a pretty low threshold though. Okay. So yes, if you did this budget and you came in at a loss, then you don't owe any kind of tax, right? That's zero. But if this came in and was $300, you actually would not you would not have to file a tax return even, given that you didn't have anything else, any other income, right? So understand that your self-employment income is also not the only income that you have. Maybe you might be married to somebody who has income and file a joint tax return. You might have capital gains. You might have a day job. All of these things just go into one bucket, which is your income, and that, you report on your tax return. So all of this kind of flows in together. But for self-employment tax to kick in, you're correct. There is technically a little threshold, but it's low.
But after that, that 15.3 is a really important number.
It's really important. Yeah.
One person was just asking about whether LLCs are expensive to set up.
They vary state to state. You know what? Honestly, I don't know how AI is doing on this these days, but it might be cheaper now than it used to be because of that. It's a pretty rote legal task. They are more expensive in California than in other states. I am coming to you from the mountains of Asheville, North Carolina right now. And where I live, my annual filing fee for my LLC is $200. I believe it's far higher, probably 4 times that amount in California. And there may be additional rules about additional taxes because of that. So be careful. I think if memory serves, don't quote me. Again, this is not personal advice here, but if memory serves, it's around $1,000 per year. And that's not the setup, that's the maintenance. Yeah.
And there's lots of supports to help folks set those up, but I think it's hard sometimes to answer expensive or cheap because that's dependent on each individual person's understanding of expenses or cheap. But it's definitely can be a couple $1,000s, especially if you work with an accountant or someone to help you set up the LLC.
Mhm. Yeah.
Mhm.
One other thing, I have a resource that I want to mention.
Yeah.
If you, this is where being an artist and an accountant comes in handy. If you want, I have this on my website. This is a visual guide to artist tax deductions. And if you just, what it is, the way that I design this is basically kind of like a translation tool. So this is what we call the things we're spending money on in our practice, you know, because we speak our own language in the arts. Like, I don't know any artist who says that they do advertising, but we all do visibility, right? That's the kind of thing I'm talking about. So your visibility is advertising to the IRS. And that includes things like, you know, your Squarespace, you know, like your domain, things like that. So all of those things are listed here. That's what you call the thing. And then this shows you exactly where it goes on your tax return. Okay. So what I've done, this Schedule C, Part 1 is income, Part 2 is expenses. That's the structure. I have taken all of these expenses on the Schedule C and just laid them out in a column here to show you what goes in each one. Okay, so it's a really useful tool. I will also tell you it's got the little complex rules like home studio deduction, mileage, business meals. I know in LA you drive a lot. Mileage is going to add up. Also, if you have an ecological car, mileage has not caught up to EVs, and you get it based on gas rates. Even when I have a fully electric vehicle, and I still get the full mileage rate. It's this little bonus. But you can get this. My website is sunlighttax.com, and there's a little link at the top that says deductions guide. So if you go there, you can grab that. It's optional, but I think it's helpful. Okay.
We do have a bunch of questions, and we can choose to just keep some of these and finish anything you want to cover presentation style and then move into full Q&A and just start going through.
Yeah,
Your call.
let me draw this sort of integration of all this stuff together. I think
Great.
that will be helpful as a baseline, and then we can just let her rip on questions.
Sounds good.
Okay. Okay. So that's the structure of a Schedule C altogether. So another thing that I want to point out to you is your commission very likely is not the only income you're going to have in your art practice, right? It is likely that it will, you know, you are going to have to track your expenses for that. And so it is probably a very good idea for you to have a separate bank account just for that commission. I bet Lita would back me up on that. That's going to make the tracking really, that was a yes.
Yeah,
Okay. It's going to make your bookkeeping clean. And that's going to just, because it's obvious, you know, in your presentation, Lita, like that like checking in with cash flow is so key. You're just going to do better and it'll feel better. So you may have another account for the rest of your art practice, right? So what I want you to know is that your bookkeeping and your taxes are not exactly the same thing. They're very close. They overlap a lot, like 90, 95%, but they're not precisely the same thing, okay? So you may have multiple streams of income, commission, and then other art income. You know, this could be other grants. It could be sales, like art sales. If you're a gallery artist, it could be honoraria. Maybe you do speaking gigs at universities, right? Honoraria. It's possible you know, do some kind of service-based work. Maybe you do some design work for people and you invoice clients. So those invoices. We could probably name a bunch of other sources of income you can have as an artist, but those are generally kind of the categories that I see. So what I want you to know is you're going to keep your commission separate so that you can track it and you can track cash flow. And you're going to have all your other art income also separate so you can track that, which you want. But when it comes to your taxes, you're actually going to add them together. Okay. So you're going to go this plus this. You're just going to pull all of them over. You can do your books for these separately, add all your income for both together and report it just on one income line on one Schedule C. Okay. Same with your expenses. You're just going to add them all together. You know, do your books for the commission, find your expense totals there, do your expenses for the rest of your art, do your expense totals there, add them together into this. Okay. On your tax return, the Schedule C, you know, we've got the official one, or we've got the one that I made pretty, which is here. But either way, whichever one you're looking at, you are going to have to get totals for each expense column. So this is a little more fine-grained. This will help you. This guide will help you with that. But so you're going to add each of them. What I mean here is you're going to add, 20 different categories. So you're going to have your mileage expense. You're going to have your supplies expense. You're going to have your home studio expense, but it'll be a total between these two parts. Okay. All right. So while we're talking about combining income, let's zoom out even further than just your art income and talk about the fact you might have other income. Oops. Okay. Okay. So what does the other income look like? All year long, let's just take the year we're in now, 2026, right? All year long, you're going to earn income, right? And you can earn all kinds of different types of income, right? You may have income from self-employment. And when I say that, that's going to include your art, your commission. It's going to include all your other art income, okay? It might include something else. It's possible you also do something completely different, like drive an Uber or do construction, right? And so you might also have other 1099s, which are also self-employment income. But the interesting thing is the point of your tax return is just to add it all together. So that's just self-employment income that will go into your tax bucket, your income bucket. You might, in addition, have W-2 employee income, right? That's another way to earn income. Like I said, an artist professor, a teaching artist, is going to often have both of these types of income. You can have them at the same time. There's no if you earn income, this income, you can't earn that income. That's not how it works. You can earn all the income from all the sources that you want, and it's just additive. You just throw it all in the bucket. Okay, you're not going to break your tax return. Accountants always have work because taxes can go as complicated as you want. The other thing, so these two categories are what we call earned income. There's other kinds of income though. You could also have rent and royalty income, right? As an artist, you might get royalties from, look, I wrote a book. In theory, one day I'll get a royalty check, right? I'm still waiting, but one day it's going to happen. You might license your imagery to be printed on wallpaper or, home goods, right? So you could get royalty income from that. Also, Airbnb rental property, that will count as rent income. Capital gains. So if you trade equities, stocks, and bonds, if you sell them for and you make income, you have gains. The gains are taxable. Similarly, if you sell a large piece of commercial real estate, the income will be considered capital gains. You get a farm or a fishery. I know as an artist, that's not super likely, but I've had artists who, I was just giving a talk at Brown University, and this guy, I kid you not, was an artist who had a fishing boat, and he had fishery income. So it's possible that you have this kind of income. Interest and dividends. And I'm going to stop there. There's like 100 other types: hobby income, gambling income, prize income. Like, we could go on for a long time on little stuff, but these are the big categories, okay? The other thing that I want you to note, the point of your tax return is going to be to tally all of your income in a given tax year, okay? Now, if you're single, this is easy because it's just going to be one bucket, right? If you're married, now you've got two different options. You can either file married filing jointly, in which case the two of you are going to have all your income going into just one bucket. That's a joint bucket, right? Or you can file separately, in which case you each have your own bucket. So each of you would have a situation that looks like this. But just note, if you're married filing joint, all your spouse's income in every single one of these categories is also going to be going into this bucket, okay? Okay, now, taxes. We live in a pay-as-you-go tax system, and what that means is it's required by law. It's not optional. It's required that you pay tax throughout the year as you go, okay? And you can either, well, you've got two options for how you can pay taxes throughout the year. If you're an employee, right, you have payroll, somebody's paying you on payroll, and so that is going to be withholding on your W-2, okay? So every single paycheck, you're going to be paying some of your money, some portion. All of your Medicare and Social Security will be taken out, plus some federal income tax and state income tax, okay? So with every paycheck, you'll be paying into your taxes. Now, the other option to pay your taxes is basically for all these other kinds of income, all right? We tend to think of it only as for self-employment income, but it's actually also for rent and royalty income, capital gains income, farm and fishery, agricultural income, any of this stuff. These guys, all of these types of income don't have payroll associated. So they don't have that mechanism of like nice, easy, every 2-week tax paying, right? So if primarily your income is over here, your second option is called estimated quarterly taxes. Okay, and I'll represent that a little differently. I'm going to represent it like 4 chunks because look at that word. It's quarterly, okay? You don't, and thank God, you don't have to do bookkeeping every 2 weeks and pay in every single 2 weeks the way these guys do, right? We don't have that structure of payroll. So there's just a more minimal standard put over here, which is you have to pay once per quarter, okay? This is not optional. Again, tax literacy is really low. We should learn this in high school. I wish we did. It is my personal mission to teach everyone in the US this stuff. But until that day, a lot of people don't discover that quarterly taxes are a thing until they get an enormous, debilitating tax bill. And they owe penalties. And they're like, I don't understand why I owe penalties. How was I supposed to know? That's quarterly taxes. Better you should know up front. And so the deadlines for those are April 15th, June 15th, September 15th, and January 15th. Those are the quarterly tax deadlines. So given that you aren't taxed on all your income, you get to take expenses, right? Remember this equation that we wrote? Income minus expenses equals profit. I'm not going to write loss because if it's a loss, you're not paying taxes. But you don't even know how much tax you're going to owe unless you know what your profit is. And you don't know what your profit is unless you do some bookkeeping. Okay, so if you have not yet set up bookkeeping, now is the time. Lita also wants you to set up bookkeeping because it's going to help with the commission. It's just going to be your friend. It's going to give you the information sooner and not give you nasty surprises. Bookkeeping is sort of how you see things coming. Okay. So once you have a larger operation and more income coming in and more expenses going out, monthly bookkeeping would be how like a larger organization does their bookkeeping. But if you're just kind of on the front end and you don't have a super ton of income yet, quarterly bookkeeping is okay. Like that's the place to start. If bookkeeping is new to you, do it at a minimum once per quarter. Partly because that way you know what income is taxable and you can make your quarterly tax payments. And also, it's just like, it's a good minimum standard. Okay. That feels like a good place to go to questions.
I think that's excellent. Thank you so much, Hannah and Lita. And we are gonna dive into our questions because we've got some. I'm gonna stick with some tax related ones at first, Lita, and then there are a couple from earlier that relate to you that we will bring in near the end. But jumping right in, and I know we just talked about it a little bit. So just to recap, when would you recommend an artist pay quarterly taxes versus annual taxes?
Yeah. So there's a law about it. It's more than a recommendation. But it is, let me just show you. I'm going to show you another tax form. But listen, this is on purpose because I think tax companies are like beauty companies. They try to sell things to us based on fear, right? And so they don't want you to look at this because if you feel fearful of this, then they can make more money off of you. So I'm here to say, this has great information that will help you. And if you can get over the fear and just look at it as information, you will not have to pay an accountant $300 an hour to find a number that is right there for you. So one of those numbers, what I want you to do is pull out your 1040 summary, which is 2 pages on the front of your tax return. Page 1 is the one that says 1040 at the top. And page 2 is the one that has your signature, okay? These 2 pages summarize everything in your entire tax return. And so if you review these 2 pages, you know the cliff notes of everything inside. So that's really powerful. The actual law for who has to pay quarterly taxes shows up on line 37, amount you owe, okay? So your goal when you pay taxes throughout the year is actually just like that little equation I set up right there. It is to get your total tax and your payments, to be as close to each other as possible. So throughout the year, you want to be making W-2, withholding payments in combination with quarterly tax payments, whatever ratio, doesn't matter. That's up to you. IRS doesn't care how you pay taxes, as long as this bucket's getting filled, do it however you want. So your payments that are in this bucket will be subtracted from the total tax that you actually owed. And that will leave you with one of 2 things. If you overpaid, it's a refund. Yay, right? That's great. If you underpaid, we don't call it a refund. We call it amount you owe. And this is line 37. And that is your answer. Line 37, the amount you owe has to stay under $1,000. If it stays under $1,000, you are paying enough that the IRS considers that it's relatively easy for you to settle up at tax time, which, money's due April 15th, no extensions. If you owe more than $1,000, you are now required by law to be making quarterly payments the following year. And if you do not, you will be assessed penalties once per quarter that you don't pay, plus daily interest on your unpaid balance. So in other words, the penalty you pay is tiny if you're paying something, but it's too small. But it gets bigger if you're holding all of it back and waiting to pay until April 15th. So you can reduce your penalties by paying this. We can't calculate the penalties until a year later because we don't know what tax you owed until a year later. But if you want to see the penalties, they're the line under line 37, they're line 38, and it's called estimated tax penalty. So there it is.
Excellent. Is your tax, I've got a couple more. Okay. When would you recommend an artist form an S corp?
Sure, that's a whole thing. I will tell you that in my book, I have a section on LLCs and S corps that gives you a triage list of like when you should and when you should not form an S corp. So I do recommend that for like a more full answer. But an S corp is a structure. It's an election you make with the IRS to be taxed as an S corporation. So it's a tax status. And it shifts the structure of how you pay yourself. And effectively, you pay yourself on salary. That part is not a joke. You have to set up with the state of California as an employer, pay withholding, workers' comp, all the things. Like you are now subject to employment law in your state, and they'll come after you if you get it wrong. So you pay yourself, and that you owe the 2 halves of Medicare and Social Security on. But the profit you make over and above the salary that you pay yourself, that is no longer subject to self-employment tax. So the summary is above a certain level of profit where you have consistent profit, $50,000, $60,000 minimum, it might be worth considering forming an S corporation. But I want to warn you, and please look at the chapter in my book on S corps, because some states tax back all the benefit of an S corp to the degree where you've wasted your money and it does you no good. New York is one of those states. I know you're in California, but it's important. This is where I am not giving individual tax advice. You really have to look at your individual situation. Okay.
Is there a good rule of thumb to set aside? Is it a good rule of thumb to set aside approximately 15% of your artist fee to prepare for taxes?
I actually think once you're dealing with public art commissions and money like this, you might want to go beyond the rule of thumb and be doing quarterly bookkeeping and putting that profit number into an online income tax calculator. They're free. Like it's actually pretty easy to find. The AARP has a great one that's free. It's 15% seems a little low to me, especially in California. I might be pushing more towards 30, 40. But this is very dependent on how high your expenses are, how high your overall income is. Income tax rates go up the higher your income. So if you're very low income, maybe 15% will cover it. If you're very high income, it will not. So it's going to depend, and bookkeeping is going to give you a finer grained answer on that.
Thank you. On that thread, is your tax bracket determined based on your gross income?
No, well, depends where you mean gross here. So we're talking what you're taxed on, your self-employment tax. Your self-employment income that is taxable is your profit, not your gross. So it's what's left over. So I would say no. But if you mean gross in the sense of all the income in this whole bucket, yes, it is. That is what determines your taxes.
Okay, so this is one. Do you have to separate each commission from other expenses, like each commission expense? And I think this is one Lita and or Hannah could answer. Is a good idea to separate all of the expenses related to a commission from other expenses like studio rent. And they clarified a little bit. I mean, when our budgets carry over multiple years and when one project has to pay for another because of payment schedules.
That's a great question. Lita, I'm curious how you would answer that, and I'm happy to come in.
I'm gonna answer part of that I think
Sure.
I should answer, and then I'll let you answer the other half. So ideally, you do not want projects to be set up where they have to pay each other. So that goes back to the presentation originally, which was ensure that you're working with the commission agency so that a project is set up that it's fully funded, that you have all the money you need in your account to pay for that specific project and make a profit. If you see that you're working on projects where you need to supplement with additional income, even temporarily, the project is set up wrong. So I would encourage you to, when you get a commission, work with the commission agency to make sure it's set up so that you don't have to do that, because that is also not fair for you. And it shouldn't be like that. You should be able to have enough money to support you and the project and pay yourself an adequate fee. Now, whether separating expenses from other expenses like rent, Hannah, I don't know what your recommendation is there.
Yeah, so this is where I would say that your direct expenses related to the commission, you should try to keep in that one bank account, have them come out, like actually spend the money out of that bank account. In other words, your goal is for it to actually touch the bank account. Or you could use a dedicated business credit card for the same purpose. So that way, you know, sort of budget wise for the grant, for the commission, how you're doing, right? If you're over, under, then at tax time, you're going to have that sort of book tax reconciliation process where you add in the other stuff. So that'll be your home studio, that will be your business mileage. It may be some other things, client meals, like business meals. I don't know if that's allowable in a public art commission. It is definitely allowable in general for your art practice. So those kinds of things, yes, you would add in. I made the two columns. There was like the column for commission and the column for all your other stuff. Track them both, and then you're going to add them together for your taxes. I hope that answered it, but
I think so.
Okay.
So this also might be one for both. Let's say you're selected for a commission, but want to operate under an LLC. Actually, this might be more of a question for Lita. Up to what point do you have to change that? Up to what point in terms of the contracting process? Do you need them to have their LLC in place if they want to have it under an LLC?
That is an excellent question, and it depends on the commissioning agency. There are certain agencies that require you to have your company or the name that you will be operating under set up when you are submitting your application. So before you are even selected, because they want to make sure that the same entity that is receiving the commission is the same entity that is being contracted. We have worked with artists who have reached out to us saying, hey, I did receive this large commission. I want to set up an LLC. And there are points during the contract phase we can do that. It just becomes a little bit of a trickier situation because the commission agency has to confirm that, yes, that is indeed you. You are not handing over the project to an LLC, to another entity to manage. So it can get a little tricky, but it's not impossible. So if you are if you are submitting an application, if you are a finalist for the project, I would recommend that as a great point to talk to your assigned project manager, to talk to the agency to see what the possibilities are if you are selected for setting up an LLC. But that's an excellent question.
Thank you. Next question. I'm going to answer this one because it's real easy and I don't want to miss it. Will these slides be available to download? You will be able to view the recording, as we have said. I think for this session, we will be following up with some links to resources, including some of the budget sheets that we've talked about and links to some of the resources Hannah's been speaking about as well. So if you signed up through Eventbrite for this session, you will be getting that resource guide. And Summer, please help keep me accountable to make sure we do that. Next one. Do commissioning organizations automatically give you, the artist, a 1099?
Yes. So when we work with artists on a project, you will automatically receive a 1099 from the commissioning agency. This is across the board. And this is a great follow-up. I have a question for Hannah that maybe we can kind of expand on a little bit. Can you talk, because when an artist receives a commission, and going back to that $100,000 example, if they have to pay out 60,000 of that to a variety of vendors, do they have to issue 1099s to each vendor? And how do you recommend they go about that to ensure that they're tracking their expenses correctly?
Yes, they do. If you pay a vendor over, so there are some more fine, I'm going to give you the gross rule, and there's some more fine-grained ones. And I have a little course about this if you want, and I also talk about how to do it in my book. So there's like further resources. But the basic rule is if you pay someone over $600, then you're going to have to issue them a 1099 to report that payment. It's really not casual. There are 2 checkboxes on your Schedule C saying, did you pay anyone over $600? And did you issue them a 1099? So you are really on the hook for this. There's no way around this. There are some exceptions, though, which are important to note. If you pay them by credit card or through a third-party payment processor, you actually do not have to issue them a 1099 because you actually transfer the paperwork obligation to the third-party payment processor. So credit card is a workaround. There's also, if they are an S corporation or a C corporation, you do not have to give them a 1099. The way that you know that, right? If you paid my company, which is Sunlight Tax, you don't necessarily know that I am an S corporation, though I am. And so the way that you would know, and the best practice, is that before you pay somebody money, you ask for a W-9. W-9 is the reporting, is the info gathering paperwork. It doesn't go to the IRS. It stays with you for your records so that you have the information you need to be able to issue them a 1099 when the time comes. It just has their ID number, their address, and their legal name, and that's what you need. So that's kind of the basics. There's a little more detail on 1099s, but that's the gist.
Yeah, I think this is great. And this is just an additional resource for artists to know as you're managing your budget, as you're managing your cash flow and your expenses, and you're tracking your actuals. Just keep that in mind that as you're paying expenses, and since you're not going to have to pay taxes on that, just ensure that you're following through with any kind of legal tax 1099 forms.
Great. We have a question for Lita. If you have a commission, are there typical points in the process where you might need to hire a lawyer, say for the initial contract negotiation phase? This artist is trying to understand planning a project budget and is wanting to see when they might need to put in legal fees in their timeline.
Another great question. The contract negotiation phase is the most important phase of the project. Obviously, we know legal fees are very expensive. So if there is funding set aside to cover that, if you do want to hire a lawyer, there's some incredible art lawyers, especially in Los Angeles. We actually work with a lot of them on our contracts to make sure that our contracts are equitable and fair for artists. But if you want to work with an art lawyer to review the contract, that is the point to do it. Because after you've entered into a contract, if you've signed off on everything, it's going to be hard to go back. The next point in the process where a lawyer would be needed may be during your contract with your subcontractors. So after you've entered into a contract with a commissioning agency, you may need to enter into a subcontract agreement with your fabricator. Usually it's typically those big costs, your fabricator, your installer. I know Emily can probably provide a lot more detail and context on that, but that is a really good point to know what to include in those subcontractor agreements to ensure that you are protected.
I really recommend actually, if you are an artist that is going to be doing more and more and more subcontracting, especially for fabricators and installers, if you find you're going to be doing that multiple times a year, multiple commissions, I actually recommend you work with a lawyer to get a draft of a template for yourself or request templates from someone that you can use over and over and over again. And you know those parts where to change them because it gets quite expensive to do that every time with those subcontractors. So if you can just one time set aside a couple grand, work with a lawyer, get a subcontract agreement that you personally feel good about, that you would know how to fill out in those instances. You might need an hour or two of help with the more complicated ones, but that can really help control those legal fees. You're gonna always want to look at the contracts with the commissioning agency as one at a time thing to make sure you're not entering a contract with a commissioning agency thoughtfully. But those subcontracts, you can get a good template and reuse those.
Great suggestion.
If you are working on multiple project commissions at the same time, would you want to have multiple LLCs?
I can take a swing at that, but what I want to say is that an LLC is a legal entity, not a tax entity, and I'm not a lawyer. So really where this question belongs is with a lawyer. They are the expert on that. So I mean, I think it's
I would go out there and say no to some degree.
okay. Thank you.
I'm also not a lawyer, but I've answered this question before, and I'm fairly comfortable enough. Obviously, check all of the things that one should check. But different from where we really strongly recommend opening up multiple bank accounts to track different projects. It's not the same logic with the LLC, where you say open an LLC for every single project necessarily. Obviously, speak with a legal person to help you understand that more closely. But my understanding is more typical scenario is to have one LLC for all of the things that you might do underneath it.
I agree. Unofficially, not as a lawyer.
With all the caveats. All right, we have two more questions. An unrestricted art grant for your art practice, is that taxed or something exempt from taxes?
It is almost certainly taxed. Assume it's taxable unless that granting organization can point you to IRC, to Internal Revenue Code that says it is not. And most of them cannot. And so that means it's taxable. The one kind of grant that can sometimes be non-taxable is like a relief grant. I'm coming to you from Asheville, North Carolina. I actually had my studio destroyed, 20 years of art destroyed a year ago in Hurricane Helene. And relief grants sometimes do qualify to not be taxed. But you should assume all grants are taxable unless you have proof otherwise.
That's a really wonderful point. And as a sister city who also had some artists lose things, look into that, guys.
Yeah.
And I'm really sorry to hear that, Hannah.
By the way, can I share another resource? It was only months after Helene destroyed so many artist studios here in Asheville that then the fires happened in LA. And I was just like, heartbreaking doesn't begin. But I will tell you this, I never want to waste my pain. And so I did create a page where I did some I just outlined how I applied for FEMA funding and some various other things like that. So if you ever want that, or you want to share it with a friend who was, in the fires, or sunlighttax.com/help. It's all free. Share it with whoever needs it.
Thank you. That's wonderful. All right, let's change it up a little bit for these last few questions. Are we working, if we're working internationally, do we have 1099s as a foreign contractor in a foreign country? I don't know if you can talk about that, but let's
You're gonna make me work for it.
Yeah.
International taxes are a whole thing, and it's a little out of my scope, but I will tell you, it is that thing I said about get the W-9. Before you pay a contractor, make them give you a W-9. This is a best practice and it will save your bacon. Because what can happen so easily is you pay a fabricator in January, 12, 13 months go by, it's tax time. You're faced with that little checkbox on your tax return. Did you issue the 1099? And you're like, oh, shoot, where did they go? I can't find them. And they've moved to another country and you can't find them anymore, right? You still have to issue that thing or you're lying on your tax return. Like you have to issue the 1099. So if you use that little moment of leverage that you have, you ask for them to give you a W-9, you have covered what you need to cover to know that you are going to be able to issue them a 1099. So you want to do that. The thing about the W-9 is there are checkboxes on it that tell you if they have any status, like foreign international status that you need to be aware of. This might not be obvious to you, right? And so if they do, then you may need an additional form, which is called a W-8BEN. So it stands for beneficiary something, but that is for somebody who has like an international tax status. So it's definitely important. The W-9, do not miss it. It's a best practice, and possibly this additional form, the W-8BEN.
Excellent. Thank you so much. One last question, and I actually think there was a quick one in the chat as well that I'm just going to try to grab. I wondered if fabrication costs are considered expenses, including the materials and labor. Yes, 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 yes.
Yep.
Yes.
This last question that just came in, how do things change if your commission is through an agency versus a percent for art? And I'm assuming they're going to be asking how those commission how that changes as it affects taxes or income. But if there's something you'd like to clarify to the asker, please say so. And we also have Pat back with us. And I apologize. I forgot to bring you back earlier. I was so into these questions. I just kept moving. But we're
I love it.
cool. All right.
All
I'm
good.
not sure that there's a tax difference there.
I don't, yeah.
Income, it's about money that hit your bank account. It's not really about who's putting the money in your bank account.
Yeah, and from a project perspective, again, there may be a little bit more flexibility when it comes with working directly with a developer versus working with a commissioning agency. But from a financial and budgeting standpoint, I would say nothing changes. So everything that we went over today in terms of knowing what cost to budget for, creating a budget, tracking your budget, creating cost variances, all that kind of stuff will still apply regardless of who is commissioning you.
Wonderful. Summer, why don't we just pull up those last few closing slides because we have closed out our questions. And as we do that, Pat, if you have anything you'd like to add, please feel free. But you had such great colleagues on tonight.
Oh my goodness, it was so wonderful and so insightful and so much great information. I can't thank both of you enough. This is exactly why we do this program. The PAiD program is about offering resource and education to artists to learn all the ins and outs of pursuing public art and the business of being a public artist. So this was wonderful. Just thank you so much on behalf of our department and division.
Absolutely echo that. Really, really appreciate both of you tonight. And to those of you who participated, we appreciate you too for coming and asking your questions and being open about putting that out there. As Hannah and Lita both shared, we know these topics can be uncomfortable sometimes, dysregulating sometimes. And so just having the gumption to show up, talk about it, that's a huge thing already. As always, we want to encourage you, participants, please reach out if you have questions, if there's something follow up from this, if you want to suggest future workshops, if you want to talk to us about anything, you are always welcome to email us at info@dysonwomack.com. To learn more about the upcoming suite of workshops, please follow us at Dyson Womack on Instagram, and we will be more than happy. We'll be posting out the upcoming workshops where we're going to really dive in to fabrication, materials, engineering, a whole nother side of this very exciting field. So you can go to the last page, and I think that is our presentation for tonight. So thank you again to Hannah and to Lita for this wealth of information. For those of you who maybe got a little bit overwhelmed there, you will have time to watch this at your time, hit pause, rewind, fast forward, re-engage with the material. But this, again, just so helpful and so wonderful. And I wish this kind of thing had existed when I was first starting out. And I hope that it continues to be a resource for others. So thank you both so, so much. And also thank you, as always, to LA County Arts and Culture. Absolutely. All right. Good night, everyone. Hannah, thank you for your late night participation over there on the East Coast. I send you off with all of our care, and we'll be in touch with everyone soon. But thank you all. Good night.
Wonderful. Thanks, everyone.
Bye, thanks so much.